Hi there everyone, FX Major here. Okay guys, also on this video I'll be actually teaching you guys everything that you need and have to know about Forex, right? And as I've told you before, that we'll be having 4 modules, right? So the first module will be this video, and we'll be having the second module, third module, and fourth module. So all these videos are there to actually help you guys understand everything about Forex, understand how to actually analyze, understand and how to actually take trades, proper win rate trades, right? So on this video I'll be actually doing that, and so stick around guys. Make sure that you subscribe to our YouTube channel to make sure that each time you upload you get the video, right, and you start learning. So do make sure that you subscribe to our YouTube channel and also hit that like button and hit the notification button to actually get notified once we upload, right? So as I've said guys, that I'll be making 4 modules. So this video is the first module where I'll be teaching you guys everything about Forex step by step, and the second video will be the second module whereby I'll also be teaching you everything guys step by step. So I'll be having on this video I'll be actually doing gold, right? I'll be actually doing gold, whereby I'll be teaching you everything that you need and have to know about gold, right, and how to actually trade gold and how to spot good entries, right? So this video is both for beginners and intermediate traders, right? Traders who know how to trade and traders who do not know how to trade, or people who want to start up trading. So this is the first module guys, so make sure that you watch this video until the end. If you haven't subscribed to our channel, make sure that you subscribe to our YouTube channel and also hit the notification button to get notified once we upload, right? So let's get into business guys. Okay, so guys, as you can see here, I have already had my analysis, right? I have already had my trade, but however, let's remove all the drawings, right, so we can start afresh. And so that you guys can actually see how we actually do this and how we actually analyze. As you all know guys, that we start from a daily time frame. Okay, so since this video, right, or rather this module will be focusing much more on teaching you guys, I won't be actually diving deeper and deeper into things that will confuse you, right? So I'll take it step by step to actually make you guys understand how we actually analyze, right? So this this first module will actually be the module that will help you to actually understand and to make it actually a simple way to actually make you guys understand how we actually analyze. So I won't go deeper. I think I'll go much more deeper on the third and the fourth module, right? So you guys, you have that understanding of how everything is done. So on this first and second module, I'll be actually taking it step by step with you guys to make sure that you guys understand everything. Okay, so you all know that whenever we analyze, we have to start from a daily time frame. So a daily time frame basically means that when we start from a daily time frame, we get to actually see the full view of the market, right? You get to see everything that the market has been doing in the previous times, right? So with the daily time frame, we can see how the market has been doing previous years. So we actually use this as our data to actually see how the market has been ranging, right? So this is our data. You know, this is our data. So the daily time frame is our data analysis, whereby it shows us, or rather reveals to us, how the market has been moving from the previous times, right, or rather previous weeks, months, or years. And then we have the 4-hour time frame. So with the 4-hour time frame, we get to see how the market is actually moving in the current structure, or rather the current market, or rather let me say the current time. So with the 4-hour time frame, that's what we get to see. We get to see what the market is actually doing currently, right? And then we also have the 1-hour time frame. So with the 1-hour time frame, we use the lowest time frame, which is the 1 hour, 30 minutes and 15 minutes time frames, to actually see how we can spot our trades, or rather how we can enter our trades, right? So it's an execution level, right, or rather time frame which we use. So as I have explain this whole concept to you guys, let's start with the analysis. Okay, so the first thing that we have to do is we actually have to cater for our top and bottom levels, right? So as you can see here, we have our first top level, and then we have our second level, which is our bottom level, right? Which is what we are currently seeing and experiencing in the market. So these levels here actually help us to actually see where the market rejected or reversed. As you can see at this top here, the market actually rejected, right? And therefore it came to the downside. And this point here, that's where the market rejected to go to the downside, and therefore it went to the upside, right? So as we can see how the market is ranging in a previous data, we can now know that this range here is what we should cater for, right? This range here is what we should actually look at, you know, to start making money. So as I can see, that this was actually a beautiful trade, guys. That's what I can tell you before we can continue or proceed further. This was a beautiful trade because with this, it's a simple analysis. It's a very simple analysis, because you know, like, for sure that as soon as the market touches here, it will go to the downside. As soon as the market touches here, it will go to the upside, right? So currently this is our highest high and this is our lowest low, right? So these levels are catered for whenever the market reaches at this point here. But however, as we can see here, the market hasn't reached to this level, right? Or rather this point here or this point here. It only tested that level once and also here once. So we have to cater for what we have inside this overall structure, or rather overall market structure, right? Okay, so if I can zoom in, we can also see something else here. We can see that at this top here, the market rejected, right? Which we have here, this candlestick here, this rejection here, and also this rejection here, right? So this actually helps us, guys, to actually understand how the market is moving and where the market reverses or rather rejects, right? So these levels here are there to actually help us to see where the market is reversing, or rather to see where the market is rejecting. So if we can go to the downside, we can also see at this rejection here, and also we have this rejection at this point here, a rejection at this level here, and a rejection at this level here, right? So as you can see here, this shouldn't confuse you, guys, right? This shouldn't confuse you, because these levels here are actually our levels of rejection, right? Or rather where the market rejected. So with these levels, we can 100% know that as soon as the market touches this point here, or rather any of these levels here, it will actually complete what we are actually looking for, whether we are looking for buys or the sales, right? So since we now have these levels here, we can actually anticipate and see that we have this first rejection, which we have here, right? And we also have another rejection here, the third rejection at this point here, a rejection here, some sort of a rejection here, but I'll explain it much more further as we go on with the video. A rejection here, a rejection here, a rejection here. Okay, so with this rejection, guys, let me quickly explain it to you how we actually can see how these rejections will go about, right? Okay, so let me remove this. Okay, so as we can look at these rejections, we can see that as soon as the market reached this point here, it actually reverses, right? Hence why we had this long candlestick here, and then a continuation to the downside, right? And then after this whole candlestick, we had this rejection, right, where the market reversed at this level here. So we basically know that as soon as the market rejects or rather reverses at a certain point, we know that we are actually looking for buys or sales. But however, if the market, for example, at this point here, it actually came, retested at this point here, and shot to the downside, we would have anticipated and known that at this point here, this is our point of entry, right? Because the market at this level, it's respecting, right? So as soon as we can see that the market is respecting a certain level, that's when we can have high assurity that the market will go in our favor, right? Or rather will go in our direction. All right, so seeing this, this point here as a rejection level. We can also see this as a rejection level whereby the market rejected or rather reversed, right? And then we had a huge drop to the downside until a certain rejection here. But what I can see, rather, let me go back and rephrase what I have said regarding this rejection, right? So as you can see here, as soon as the market reached this level here, we had a rejection and the market continued to the upside until it broken the structure. Right, so I'll actually explain all this in a much more clear and simple way when it go to the lower time frames, right, from our 4 hours to actually 1 hour. So this is just a daily time frame, guys, to actually show you and make you understand why we have these rejections, right? We will still go deeper. We'll still go deeper. So we can see the other rejection here. So this rejection here is similar to this rejection here. This is what we call the change of market structure, right, or the change of market condition, right? So this is a change of market structure whereby instead of the market continuing to the upside, it decided to change its formation. It decided to change its movement, right? Therefore we had this huge movement to the downside. Right, so similar to here, we have a market change of structure or other change of character, if I can put it in that way. It's simply a change of character in the simplest way. Okay, so the market actually reversed at this point here, as you can see that, right? It reversed at this point here, or rather changed its movement from going to the downside. Instead of going to the downside, it rejected or rather reversed at this level here, and then it continued to the upside. Similar to here, we have this as a form of a reversal here. So I'll explain this and other things as we go to the 4-hour time frame and 1 hour time frame, including a 15-minute time frame or rather the 30-minute time frame, because basically I like using both 30 and 15-minute time frame because they make me see the market in a much more clear way, right? They make me see the market in a more clear way. So this is no confusion, guys. This is no confusion. If you feel like you're getting confused, feel free to actually ask us how we actually managed to say these trades, or rather, if this seems like a confusion to you, make sure that you watch this video from the start. Make sure that you watch this video from the start. Repeat the video, watch the video to actually understand the full view of everything, right? So as you can see here, we have this rejection, and also this reversal here, which was created by this reversal which we had here. Remember, guys, that the market actually starts from the left and goes to the right, right? So everything that happens in the market, we have to see from the left before we can continue with the market, because the market moves to the right, guys. So we have to look from the previous market condition, or rather the market structure, on how the market was prior, right? So seeing that we have this reversal here, it also confirmed to us as a reversal at this point here. But however, for people who entered this trade, I would say that majority of them actually lost money in this trade, because as you can see here, a lot of people would have anticipated that as soon as the market reaches or rather touches at this level here, it will obviously shoot to the downside. But however, we have this manipulation which happened at this point here. So obviously, if people did enter the trade at this point here, most of them, they actually made a loss. All right, so I'll explain to you how to actually see good trades and how to actually spot good trades, right? And how to actually minimize your losses and maximize your profits, because the aim is not to lose money, guys. The aim is to make money. So we can see that we have this change of structure here, which resulted in this manipulation here, right? And then we have this lower low which we have here. So with this lower low, okay, so let me actually put it in this simple terms, right? Okay, so this is what we call our higher high. This is what we call our lower high. This is what we call our higher low. This is what we call our lower low, right? And this is what we call our lower high. So it ranges in that form, guys. So I wanted to make it clear to you how I actually call this the lower lows and lower highs, and why I actually call them the lower lows and lower highs, or higher highs and higher lows, right? So this is our lowest low, right, in the current market structure, apart from this lower low which we had in the prior market structure. So this is what we'll be focusing on, right, this whole structure here. But let me go to a 4-hour time frame to make sure to actually make it much more simple and understandable to you guys, because this thing is not actually a much more of a hassle, or rather a hassle that much. You see, let me actually do this in a much larger scale. I hope you guys are actually understanding what I'm actually showing you here, because gold is somehow tricky when it comes to trading, right? It has a lot of manipulations. However, it has smooth trading conditions, but it has a lot of manipulations, right? It has good structures, or other good patterns, but the manipulations, hey, dangerous, baba, dangerous. It's dangerous. All right. So as you can see here, this is what I was talking about, right? Okay, let me show you something. Let me show you something and prove to you that this actually works. All right. So let me start with this here. This is actually our higher high, and the market hasn't reached any level here, right? It hasn't reached the level yet, but however, we'll be focusing on where the market has reached its level. Okay, so let me go to the prior market and actually see, sorry, and actually see how the market has been moving, to actually make it more clear and visible to you guys. I'll be using this rectangle. So as you can see here, that we have this level, right? We also have this level, right, which is what we have highlighted as our levels of, okay, we have this here, this level here, we have this level here, right? Okay, and we also have this level here, we also have this level here. Okay, so seeing that we have all these levels as I have just highlighted, right, something that you have to see here is that where we have these levels, if you can check quite well, that's where the market reversed, right? That's where the market reversed in most cases, because we have this here, and we have this here. This is where the market reversed, and this is where the market reversed. Why? Because of this level which we highlighted at this point here. That's the whole reason why this market reversed and reversed at this point here. All right, and then we also have a level which we have, okay, level which we have here, right, whereby the market reversed at this point here, and also currently the market is still reversing at that point there. Why? Because of what we have. All this is because of this, and this is because of this, right? This and this is because of all this. If it wasn't for this, the market would have shot to the upside and decided to actually continue with the buy momentum, right? It would have shot up and continued with the buy momentum, right? So since we see our levels of confirmations, right, that's when we can now include what we call our instruments, right, which is trend lines, because we have already anticipated and see how the market is actually moving, and we have seen how the market is actually respecting the setup, right, by seeing that we have this level here, rejections, right, rejection levels, right? So we can now start with putting our instruments. So putting our instruments, we actually have to go back to the daily time frame, right, to actually see the market structure, or the market range, right? We are done with the rejection levels, or rather the confirmation levels, or rather the levels of rejection, right? We are done with all that. So now we have to go and see our levels, or rather our trend, market trend, right? Okay, so let me just copy this. I'll just clone it and put it at this point here. Okay, so with this trend line, guys, what we can see, or rather the use of trend lines, is to actually help us to actually see how the market is moving, or rather which direction the market is taking, or rather which shape the market is actually creating, because we can enter trades by knowing where the market is actually going, because we cannot go against the market, guys. We have to follow the market condition, we have to follow the market direction in order for us to put proper trades. We cannot just put any trade as we want, right? We have to know where the market is actually moving and when the market will actually change its structure, right? So with this here, I can see that we actually have a good trend line, right? A bullish trend line, or rather a bullish pennant. This is what you call a pennant, because it started from the bottom and it's going to the upside in an extraction view, right? It's actually squeezing the market into its smallest form, hence why we call it a bullish pennant. Rather, with the bearish pennant, it's still the same thing, but it's going to the bearish momentum, or rather the bearish move, right? So in order for you to actually put your trend lines, you cannot just put your trend lines as you like. You cannot just put your trend lines either way, right? You just have to put your trend line, or rather your trend lines, where you can see that we have placed our levels, right? As you can see here, this is our level, right? This is our rejection level where the market rejected. Therefore, we have to put our level at this point here, right? And then this here, we have to combine it, or rather we have to join it to our other rejection level, which is the rejection level that we have highlighted at this point here, right? Same applies to the upside. I know a lot of people would be asking, Major, why do you not put the trend line at this, from this point here, I'm going to the downside? I'll actually explain it to you on why. All right, let me just align this one properly. Okay, so the high reason why I did not put my trend line to start from this point here to go to the downside, because a lot of people would have anticipated this as a form of this structure, right? Or rather this structure, right? The reason being why I decided to start my trend line at this point here instead of this point here is because I have seen that this level, or rather this candlestick here, has high manipulations, right? It has high manipulations. Therefore, as soon as we can see that the trend line has high manipulations, we have to make sure that we do not cater for it that much, because if regardless, it's still the same pattern which I am anticipating in this structure, right? It's still the same pattern, but however, with this trend line here, or rather the market trend, it's much more of a confusion, because at this point here we have to have at least 2 touches, right? In order for us to have a confirmation of a market trend, we have to have at least 2 touches, but however here we only have 1 touch of the market, right? So we do not have high confirmation if whether the market will respect this trend, right? We do not have high anticipation of it. So therefore I've decided to actually use this, because we have 1-2 touches. Also here we have 1-2 touches instead of having 1-2 touches and only 1 touch of this trend, right? So it's better to have high confirmation, guys, so that you can know how to actually spot good trades and how to actually fully know where the market would be moving, right? Because it's one and the same thing, because if you can actually decide to put a trend in this type of formation, like this trend and this trend, the market will still go to the upside, because it will be an uptrending structure, right? It will be an uptrending structure. Therefore, it's one and the same thing, right? It's one and the same thing, right? So it's one and the same thing. So let me just remove this, because it's making my my setup to not be tidy, right? So it's one and the same thing, right? So it's one and the same thing. But I actually like to have a lot of confirmation, because I don't want to lose money, guys. I do not want to lose any money. Hence why I want high confirmation, because with high confirmation you can actually be able to maximize your profits and minimize your losses, right? So the aim is to actually make money, guys. It's not to actually lose money. So as you can see that we have this trend moving in the up direction, right? Or rather in a bullish direction. We actually know now. We now know that in a daily time frame the market is actually moving to the upside. Therefore, what are we actually looking for? We'll be looking for buys, right? We'll be looking for buys. Therefore, we go to a 4-hour time frame. Then we try to make everything to be clear and visible. Okay, so now as we can see that with the 4-hour time frame, it's much more visible, right, to us to actually see how the market is moving. So we can see that we have a beautiful market structure, right? Which this market structure is actually a bullish market structure. We have however, we do have our levels of rejections, right? So I can fully trust my levels of rejection and know that as soon as I enter my trade, the trade will go into profits instantly. You know, it will go into profits because I have my levels of rejections, right? Or rather, where the market will reverse or rather reject. So seeing this in a 4-hour time frame, we can actually see clearly how the market will be moving, right? So seeing that we have this in a 4-hour time frame, what I can actually do is I can see that we also have a market structure at this point here. You see what I told you in the beginning? What I actually told you in the beginning, right? Let me just clone it. This is what I have told you in the beginning, that we must have touches, right? And we must have touches in our respected levels, right? Because at this level here, I can see that we have this touch here. Let me put it properly. All right. Okay, so as you can see, we have our touch here, right? At this rejection level, that's where we can see that it aligns with the second touch which we have here, including this touch here. Our reversal line, or rather reversal point, is actually a touch of a trend line, right? Therefore, I placed my trend line at this point here, including this one here, which we had as our confirmation level of a reversal, right? So seeing that, we can now see that we have these levels here. We can also anticipate that this trade here will be a sell trade. Simple. There's no need to actually do a lot of analyzing and do a lot of confuse yourself, because this is a simple trade. It's a simple trade, hence why I managed to actually enter my trade here and close at this point here, because it's a simple trade. It's very simple, guys. There's no need to actually go there and there, try to confuse yourself with a lot of things. This is the simple setup which I can show you of gold, right? But however, we do not end there. I'm still going to show you a lot that you have to see about gold, right? Let me just zoom it out like this, because gold has a lot of confusions, right? So if you can put this touch here and combine it with this here, does it not give you a proper trade? I just want to, let me actually clone it so you guys do not think that I'm doing things out of my understanding and all that. Let me just clone it for you guys to actually see what I'm talking about. This is the previous market, right? Let me show you what I'm talking about. Okay, so with this here, you can see that this structure is similar to what we are having on the other side, which is this side here. It's similar, 100% similar. Reason being that we have this touch here, right? First touch and the second touch here, which we have here at this point here, right? And then at this point here, we have our touch here, which is this first touch and the second touch. So if you guys do not understand what I'm doing here, then I don't know, because I'm trying by all means to actually make it much more simple to you guys so you can understand what I'm actually talking about, right? So if you guys don't understand anything here, make sure that you rewatch the video to actually fully understand what I'm actually talking about, because this is a beautiful structure, guys. This is a beautiful trade, because at this point here I would have anticipated that as soon as the market touches here, I would have gone for my buys. I would have gone for my buys, and I would have just placed my stop loss just below, because I know that the market will reverse at this point here. The market will reject at this point here, so there's no need for me to actually put my stop loss at this level here. Why? And then as soon as the market breaks out this level here, I would have known that we'll continue to the upside, right? The market will continue to the upside. The market will continue to the upside, right? This is not rocket science, guys. I'm trying to make it to be much more simple to you in its most simplest form or other way possible. You see, so this is where the market rejected, right? As I've told you that this is our highest level of rejection, right? So as soon as the market touched this point here, you would have known that, okay, we're now looking for the buying moves. We are now looking for the buying momentum to the upside. We are now looking for buys to the upside. You see, so this is how you actually make it simple. This is how you actually make it simple. It's no rocket science, guys. As soon as the market touched this point here, you shoot into the upside, and that's how many points. It's a lot of points. You would have made good amounts of money. You see, so it's not that actually hard. It's actually not that hard. You see, including at this point here. As soon as the market touched this point here, I would have anticipated for a beautiful move, right, to the upside, and then we put our take profit at this level here. There's no need to be greedy, guys. As soon as we know that at this certain point the market will reject, or rather at this certain point the market will reject, that's where our take profit will be, right? That's where our take profit level will be. Just look at how my stop loss would have given. This is how you actually manage to actually milk the market in a much more proper way, instead of just losing and losing and losing, right? So this is how I would have anticipated everything, right? If I were to actually take this trade, this is how I would have anticipated everything. And also at this point here, as soon as the market touches this point here, I would have went for my sells and place my stop loss just above, right? Just above. Just above. Then we'd have taken our trades and made profits. That's how simple it is, guys, right? That's how simple it is. There's no need to actually confuse yourself with a lot of things. There's no need for you to confuse yourself by placing a lot of things at once or other. You see, so let me go back to the current market structure. Alright, so with the current market structure, right, this is what we are also anticipating. So at this point here, I'll be actually anticipating for my sells. I would have anticipated for myself. Why? Because I now know that we have a rejection level here, right? A rejection point here, and we have high confirmation. This is high confirmation because with high confirmation, you 100% know that it will go to a direction, right? So there's no need to actually beat around the bush and try to look for hard setups to actually analyze, you know, all those things. You just have to look at what the market is creating, and simple, you just make money. The aim is to make money, guys. The aim is to make money, and as you can see already, it's shooting to the downside, and that's like beautiful peeps at this point here. And as soon as the market reaches this level here, that's when I'll actually decide if whether the market will continue to the upside or it will continue to the downside, right? There's a possibility that the market will continue to the downside. But if the market continues to the downside, that's our take profit level, right? That's our take profit level, and we know that the market will actually go in our favor, right? That will be our take profit level, and this is how I'm actually anticipating how the market will move, right? From this point here, we can expect a bit of a move such as this, right, before continuing to the upside. Or if the market rejects this, or rather reverses it, rejects this setup, it rejects this setup, we will anticipate for a breakout at this zone here, and we'll have a bit of a retest before shooting to the downside, right? So this is how I'm anticipating gold and how I'm actually seeing gold as a play out structure. But however, we have to also cater for our levels, right? This is the first level, this is the second level, third level, and last level, which is here, right? So with these levels, this our entry and take profit levels, right? So as soon as the market reaches this point here, we now know that we'll take profit, or rather take more trades, going down, take more trades, or rather take profit, go down, take profit, last take profit. Okay, this is 1 hour time frame. Alright guys, I hope you guys understood everything that I've tried to show you or rather teach you on this video. So do stick around for module 2, whereby module 2 I'll be teaching you everything that you need and have to know about gold, right? So currently we do not have enough time on this video, but I'll try to make another video which is going to be module 2, right? And then module 2 I'll be teaching you everything that you need to know about our strategies and how we actually manage to see gold in a much more clear way, right? Because this setup here was just a setup to actually show you how these levels are there to actually help you understand forex and how to milk the market, right? Otherwise, Let's Make Money makes sense. If you haven't subscribed to our YouTube channel, make sure that you subscribe, hit that notification button to get notified once we upload. Let's Make Money make sense, guys. This is FX Major, your mentor.